current relative calm has been the prevailing sentiment at the Treasury bills and bond markets this week. Traders at Access Bank anticipate the same undertone today as market players remain on the sidelines ahead of the next week's MPC meeting. Tolulope Senbanjo, the team lead for Treasury at Access Bank, joins me now for an update on the markets. Thank you so much for your time today, Tolu, and quite an interesting time we've seen play out here in the markets. But speak to what we're seeing in terms of activities this week.
Thank you so much. The fixed income space has been quite bearish given the tightened market liquidity. Market liquidity opening the week was about 90 billion, but we've seen that decline to about 170 billion in repo. This was as a result of the bond auction, which was conducted by the Debt Management Office on Monday. However, the debit happened on Wednesday, where about 229 billion was mopped out of the system. This strain in market liquidity has led market activity to be stifled. We've seen just minimal trades consummated across both the FGM bonds and the Treasury bills market.
All right, but in terms of the yield curve, what's been activity like, and then what are your expectations going into next week?
For next week, we expect the market liquidity to still continue to hinder market activity. However, there's an NTB auction expected for next week, Wednesday, where the DMO is expected to offer 140 billion across the standard tenors. We also expect market to participate at this auction, given that the last auction closed at a high of 9.75. So we expect a lot of market participants to also come into this auction to throw in their bids in anticipation of being successful. And that will also continue to affect the secondary market, given that yields in the secondary market are quite depressed at the moment.
Yeah, but when you look at trends in terms of the primary auctions that we've seen so far, what are some of the outliers you're noticing?
Well, most of the attention has been on the long end of the curve, both at the bond space and at the NTB auction. We've seen that subscription at the long end is usually favorable because of the high yield on that end of the curve. So we expect that most of the subscription we'll see at the upcoming auction will be towards the 365-day maturity, and we expect a slight increase in rates given that market liquidity is tight at the moment.
Yeah, but on the bond auction debits, are you also noticing some trends there as well?
Yes, we've seen particularly the 2037 bond that was just put on the offer. Before now, it has been the 2042 bond that was being offered by the DMO. But for this particular auction, the DMO switched the 2042 with the 2037. And given that the coupon on that instrument is quite high at 16.2% already, so we saw a lot of market participants trying to get hold of this bond at the primary auction. So we've seen most of the attention go towards that auction. The auction closed at 14.5, which was the highest it has gotten to this year.
Yeah, because looking at the interest rate environment right now with MPC coming up as well, how would you say the environment is for more corporates looking to tap into this market, especially bear in mind looking at the DMO strategy to tap more into more local debt?
For market participants, I think the outlook for us is that interest rate will continue to go higher. You also recall that the Fed meeting held earlier this week also increased rate by about 75 basis points. So we think that the CBN MPC will also follow in that direction by probably 50 basis points or 100 basis points. We are yet to discover. We'll know by the time they conclude the MPC meeting next week. So given that the interest rate environment is, the outlook is for interest rates to continue to go higher, we intend to see more corporates trying to lock in long-term funds at this low rate before we see the high interest rate environment.
But on the currency, looking at the activity at the INA window, what are your expectations going into next week then?
Well, like we all know, the illiquidity in the FX market has been sustained, particularly this week. And going to next week, we don't see any of that changing. The CBN still remains the major supplier in both the INA window, and then the demand continues to outweigh the supply. So we don't expect anything to change. However, there's the retail SMIs auction conducted by the CBN, which is scheduled to hold next week, Friday. So we expect that market participants as well as organizations will be looking to participate at that auction.
Yeah, but for corporates now looking to tap into the capital markets to issue bonds, how would you say the environment is at the time?
At the moment, I think a lot of corporates will want to come into the market, given that the interest rate environment is quite high. So it's a good point of entry for most of the corporates.
All right, but there's quite a lot there playing out there. But going into next week, what is your outlook then for liquidity and the currency then?
So we expect the illiquidity in both the FX market as well as the money market to be sustained. There are no fresh inflows coming into the market next week. There's no OMO auction, there's no OMO maturity rather, and then the NTB auction is expected to be mopped up by the DMO. So basically we expect the liquidity in the market to still continue.